Hey everybody, Jason Sherman here. In today's episode of Zero to CEO, I have CEO and Fractional CFO Drew Lyon. Welcome to the show.
Thanks, Jason. Happy to be here.
Cool. And today's going to be all about cash flow, understanding cash flow and the key indicators for success. Let's just start things off with what are the key factors that contribute to healthy cash flow in a business, just so we can kind of rip the Band-Aid off.
Number one, whatever you do, if you're making something as a product or you provide a service, you first and foremost need to make money on that. Like rule number one on cash is make money on what you sell or do. It sounds, people might laugh at that, but it's shockingly common when we look at it. People don't have their numbers organized correctly.
Wait, you have to make money in a business?
It's a novel idea here. I know
that doesn't sound. I've never heard this before.
Really, the elements are around, how much, amplitude, volume, duration, terms. And so what I mean by that is how much are you getting paid? When are you getting paid? Is it contingent on a timeline or delivering a milestone? Understanding money and how it moves in and out of a business is one of the greatest measures of success. And it's understanding what is occurring to move money. Understanding operationally what drives that. And it's pretty surprising how you can overly complicate this, but when you boil it down to simplicity, all of a sudden answers become so much more readily available to, well, what do you really need to focus on to have healthy, effective cash flow?
And how do you manage the cash flow? I mean, you're talking about all these moving parts, say someone starts a business, maybe it's a startup, maybe it's a tech startup, maybe it's an app, and they're just spending a lot of money on a lot of different things, but they're not earning revenue just yet because they haven't monetized. So how do they manage that aspect of the cash flow so that they make sure their runway aligns with future fundraising?
Yeah, I mean, as with anything, you're not going to go camping and just run out into the woods and be like, great, I'm camping. You're great. What do I need? I probably need a tent. I'll probably need a sleeping bag, maybe some food. I don't know. You might get hungry. Maybe you're going to bring along some
bug spray
or bug spray. It's all about thinking it through. Business isn't some wow, I wonder how they were successful, or wow, how did that even happen? Business is awesome because it's very linear. This stuff isn't black box. You can plan out what you think will occur. And it's the KISS methodology. Keep it simple, stupid.
Yep. I say that all the time.
Start with, hey, what's step one, step two, step three? So if you're in a situation where in your example, building, a software business and you're just spending money right now.
Right.
Why are you spending money? Well, great. I'm making something and I want to, I'm going to sell it. Awesome. When is that going to occur? How many staff do you need? So thinking personnel, non-personnel. Are you going to do W-2 or 1099? So employees or contractors. How long are you going to have them around? How do you pay them? Is it check or ACH? When do you pay them? Is it, flat fee every month? Is it by the hour? Really thinking it through and then layering in the detail. And a key factor of this is bounce it off of some smart people that are around you. So have your plan, put it together, put the quantitative aspects around you're doing things. That costs money or takes time, and attach a dollar figure to that. And then eventually you're going to say, hey, great. The day is going to arrive when you say, we are going to do our first sale. Awesome. How long is it going to take to get there? And how do you know you're there? And then what are you selling it for?
Yeah. So there's so many different aspects to this. I mean, just in general, let's say that you did all this that you just talked about, you figured it all out, and now you're trying to raise money. What kind of stuff are the investors, VCs, angels, what are they going to be looking for in terms of the strategy, or, if they give you funding, and then what the negative impact that might make on, your stock and your incentivization of wanting to continue working? And there's so many aspects to that piece of it, but maybe a bit about that side of things, like financing.
Yeah. First off, the earlier you are in fundraising, depending on who you're talking to, the more they're going to realize the less is the reality of it. They know you don't have all the answers, and they know you're probably more wrong than you are right. It's not about being perfect. It's not about having the perfect plan. It's not about having the perfect number. Your number's wrong. And by the way, when you have that plan, as soon as you say I'm done, it's wrong. And that's
Right.
okay. It's not about being right. It's about defining the assumptions, defining what are your major drivers and inputs, understanding why you think that. How did you arrive there?
It
And
almost sounds like what you said there. You just said something about being perfect doesn't matter and like being wrong and all this stuff, but maybe the answer is to be able to find the answer for them when they ask you what it,
that's,
how many people are jumping on your app every day and you're like, oh, I don't know, but I can find out. And then you go and find out, you're like, well, here it is. So is it really about finding the right answer and being able to provide that?
I think I'd zoom out even further and say finding the right answer. The reality, so I invest in some of our clients and invest about 11 different business now. And the thing that for me of what categorizes a good business, do you have a market? Is your product, do you have product market fit, or do you have a very good idea of how you're going to get product market fit and measure
Right.
it? And then the other aspects are these two things. Can I ideate your business quicker than you? If I can, that's probably a bad sign because you're not able to take what you're doing and understand all the permutations of what could occur. It's
Right.
not about thinking of everything, but it's like, can you get creative and be that visionary to see the path forward? And then the other thing is, can you take feedback? Can I call you an asshole instead of you getting pissed? You're going to be like, thank you. Like, why do you think that?
Right.
And it's all important because with cash flow, it's not about being right. It's not about having the perfect answer. It's can you pivot? Can you take information in?
Right.
And that's almost anything in my experience in business. It's can you pivot? Can you and your team pivot? Can you take in available data and say, great, yep, we thought selling white gloves to people eating ketchup popsicles was a good idea. Not a great idea. We're going to pivot real quick. We're going to sell them plastic gloves instead.
Yeah,
It,
I am not going to eat a ketchup popsicle.
I don't know. It's a very odd metaphor there, but
Maybe a corn dog on a stick, right? But you're talking about some pitfalls, right? So like, what other pitfalls besides not being able to like iterate quickly or pivot or, kind of adapt to what's around you? There's got to be some other pitfalls business owners face when it comes to cash flow management. What are some of them that you noticed?
number one is hubris. Like, you're not the smartest person in the room. You're not some prescient, genius at business. Like, very few people are. It's inviting discussion and critiques around the plan. How is it wrong? And it's this overconfidence with it's going to be up to the whole way. It never is.
Right.
No
Hockey,
one, you're never
hockey
going to
sticks.
tell that number. Like, it just doesn't happen. One in a billion.
Billion, yeah. It's just never but people see what's in the news and they think, oh, this company just got bought for $5 billion, and they think that theirs is next. But they don't see the 20 years it took for the people to do that. They don't see the other 100,000 companies that failed and died, and so they just see the news, right? So that's one pitfall. What are some others you might see?
Knowing the key things that are driving changes in cash flow.
Such as
how many people do you have on staff? When do you pay them? Like, what are your biggest areas of cost? Like, maybe it's inventory. And great, like, understanding how does money come in? Great, you sell stuff, you get investment, you take debt, you raise capital, you take a second mortgage on your house and you put all that in. Or you run your, I mean, the thing that people don't talk about is there's a lot of ways to bring money into a business.
Right.
But you have to have an attractive business. And so what that means is like, great, where are you spending your money on? What are the main drivers of moving money in and out of your business? Like, and how do you understand them? And it's people get too focused on thinking it's all going to be okay instead of being very pragmatic and saying, great, how do we manage this better? And it's like, oh, well, I got all these staff. I don't want to lose any. Well, great. Like getting into, I like to call it like save the patient or save the arm. And people start getting myopically focused on, oh, well, we really need this one person. And great, we keep them on staff. Yeah, they might be the gift to, your business, the greatest thing since sliced bread. But you paying them will sink the business because maybe you don't need them yet. Or yeah, like they're a great resource, but they're just not really that effective. Or, hey, yeah, your friend Jim Bob, who you love and you've known for years, and he works here and you pay him a lot, but he doesn't do anything. Well, yeah, you just can't do those things. And you got to make the tough decisions. And I think the other big thing is not being able to make a decision soon enough. You know the decision to make.
Takes you too long.
Agreed on it, and then you just sit on it, and you don't make the decision.
when you're in a business or a startup, I mean, that's the advantage we have over the big corporations, right? Is they have to deal with a slog of like multiple departments, and like they have to get upper management has to make the final call, and then changing stuff takes forever. But in a startup and in a business, like you need to be able to basically be a dancer, being able to switch from salsa to jazz to ballroom. You need to basically be on your toes, right? And
yeah, you got to be nimble and quick, and you have to understand that my big thing for like why I really like helping businesses is think of the households you're supporting.
yeah,
It's not just the employees. They have spouses, husbands,
right,
wives, partners, they have kids, they have people that rely on them. And so if you make a bad decision or you don't have the integrity to make the tough decision, they're going to suffer. And that helps some people make the right decision sooner. And not taking action is not an option.
I agree.
Can't stand still. And if you let it happen to you, it's not going to be what you want. Control what's occurring. And there's so many things out of our control, but it's having the integrity to understand what are you trying to create, and having people that can give you critical, timely, honest feedback about what they're seeing or what they're experiencing. And then taking that, you don't have to do exactly what people say, but you need people around you that are going to help guide better decisions more.
Of course. I think Steve Jobs said that too a million times. Is his effective leadership was really putting together lots of smart people in a room and letting them be brilliant and just kind of guiding them along the right path. And that's what everybody should be doing. So we talked a lot about pitfalls, but Drew, let's say someone comes to you, they don't know anything about managing cash flow or running a business for that matter, and you say, hey, I got some strategies for you on how you can align growth with cash flow. What are the top 3 strategies you might give somebody?
Number one would be being properly capitalized. And so we'd look at it and say, great, what's the plan? What's the big audacious idea? And then you're going to break it down and you're going to look at it and say, great, we think we're going to do this. Okay. Have you done it before? No. Okay. Well, let's tamp that down a little bit then. Let's not have great projection.
Oh, man.
So what is it going to take to achieve that goal? And like looking at, great, it's going to take $100. Well, if you've only got 20 in the bank and you're only bringing in 10, but you're spending 15 every month,
right,
you're not properly capitalized.
Right.
You're going to be losing $5 a month. You got 4 months for you. So the reality here is understanding what's it going to take, how much cash, and how much cash do you have. Another thing is really looking at it and saying, how do we accelerate cash inflows? And so, great, if you have a more mature business and you have customers that are paying you, how can we accelerate the cash receipt? Can we go from billing after a service or product is delivered to pre-billing? Can we look at doing upfront billing for, SaaS type products? Can we do multi-year billing? Can we do time-based instead of milestone-based? Where it's like, oh, well, you have to finish that before you can bill. Great. Well, let's do it. Right. Hey, every month we're going to bill you this amount. It's also bill the right amount. You have to generate profits sufficient to cover your overhead.
Yeah, I noticed that about a lot of business owners. They don't know what to charge people for their services, right? And, one of the things I told people early on is the best way to find out what to charge for your service is to act like a customer and reach out to businesses that are competing with you to find out what they charge their customers, to get kind of like a good gauge on if you're like a web designer. Some people don't know it's not $500 to build a website. It's, $3,000 or more to build a website. So ask around and see, kind of get quotes, and then kind of just copy those quotes, maybe try to undercut them. Is that something you tell people?
Oh yeah, 100%. Like here's a great example. I didn't raise rates for 8 years. Was that a smart move? No.
At least you admit it.
I was focused on other things. The reality is, because I was focused on get new clients, grow the clients. Right. I wasn't really focused on maximizing every dollar. Now, At first that didn't really have an impact, but eventually we eroded 20% of our gross margin.
Wow.
By not increasing our rates consistently every year to match the market.
Right.
For us, it's about, great, how much value are we driving? We're not here to build a bill. And what we found was the better the work we do, the more readily that client stays around with us for the long term. And so that's the other thing is, don't get too focused on top dollar.
Right.
What matters is profit.
Yeah.
Gross profit for a lot of businesses, because that's what pays for the business. And so when we look at that, it's like, great, how can you be looking at what is the right amount to charge? Well, great, if you charge people a super high premium, they're going to expect super high results.
Of course.
Super fast, really correct, first time.
And they might not stay with you if they don't get those results, they won't stay with you. Whereas if you kind of offered it at a lower price and you still, overperformed or gave them the results they were looking for, they'll stay with you longer term, which means now you might be earning less per month, but you're in the long term, you're earning more than you would have if they left you after 2 months. Yeah, no, I get it. It's fantastic advice. Tell us a little bit about where people can find out more about your services, any kind of social media or website.
Yeah, we've got our website is focusedenergy.work. That's WORK. And LinkedIn, other social medias. And my number one thing is great. Fractional finance and accounting is an awesome resource for any business to look into. Most don't need fractional CFOs even. It's fractional VP, controller, bookkeeper. Really what businesses mistake is, what I've found is, when you talk to a fractional finance and accounting person, a fractional CFO, understand how much they're going to roll up their sleeves and get into the business, really doing the work, executing, driving strategy, having the tough conversations. Like, how much are they going to help you? Because I've seen a lot of people get overcharged, and it's just like, number one thing I advise people is like, there's a lot of really good people, but there's also a lot of really bad people out there that just take advantage. And I would say really look at what are you getting and have deep, meaningful conversations, because you don't need to spend a ton of money. Like, you can really scale businesses effectively, and you should be looking at, number one, my biggest piece of advice on cash flow: don't hire full-time staff right away. Hire fractional, hire contractors, like
outsource.
You put as much money as possible towards revenue generating activities.
Totally agree. Thanks, Drew. And check out focusedenergy.work for more information, and we'll see you guys in the next episode.